Hi and welcome to Market Conversations. Just want to do a quick video on Alibaba, ticker symbol BABA, as well as a portfolio update on the stock. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Well, it seems that there's more negative news around this company. It just never ends. Let's take a look at the news that came out last night. It says, Financial Times reports Beijing seeks a separate app for loan business as part of anti-monopoly crackdown. Chinese regulators are seeking to break up Alipay, the popular payments app from Jack Ma's Ant Group. According to the Financial Times, regulators want Alipay to create a separate app for its loan business and turn over user data for a new credit scoring joint venture in which Chinese state-owned business will have a significant stake. Under the new plan, Alipay, which has more than 1 billion users, will no longer be able to check customers' credit worthiness internally and will have to rely on outside credit scores. The Financial Times added that Alipay will not be China's only online leader affected by the changes. Earlier this year, Alipay was forced to set up a separate consumer finance company that will hold ends to credit services. The moves are part of China's efforts to crack down on tech companies' monopolies. That news caused Alibaba to go from 168 to where it's trading now pre-market 165. Hopefully we can see some sort of bounce when the market opens. There's just going to be a lot of volatility short term because of the Chinese government trying to crack down tech stocks. Let's take a look at the 9 months chart. This stock was trading above 200 not too long ago. This was back in early August, and then it started to sell off, and that was because the Chinese government was cracking down on tech industries, and it sold off all the way to a low of 152.80. It did bounce off, but right now we are struggling to keep above 170. So not only is the Chinese government cracking down on tech industries, they are now focusing on the gaming industry. The government is trying to prevent or at least limit how much these gaming firms can profit off of children. So shares of Tencent and Tencent-backed Sea Limited were down. Of course, this does affect Alibaba. Any type of news affects Alibaba, whether that is positive or negative, unfortunately. Alibaba is the largest e-commerce company in China, and I don't think the Chinese government is going to let Alibaba fail. So this is definitely a long-term investment. There's going to be a lot of short-term volatility, which I know can scare people, but as long as we have shares and not weekly options, I think we should be okay. So there's an article, and it's titled, Why This Investor Keeps Buying Alibaba Stock as It Falls. It says, as China continues its crackdown on big tech companies, many investors are selling or avoiding Chinese stocks, but some investors with a healthier appetite for risk are salivating at the potential value investing opportunity. Alibaba has seen its stock price cut in half, and Lead Edge Capital's Mitchell Green is a buyer. Green has known the management team at Alibaba for a long time. He first invested in Alibaba when it was below $7 per share. As the stock fell sharply amid Chinese regulations, Green started buying at around $210 per share. Clearly, we are early. He recently bought a bunch more around $157 per share. Green told CNBC that China won't drive its companies into the ground because they want to conquer the world. But the country wants the big internet companies to know that they are not bigger than the Communist Party, at least in the case of Alibaba. Let's take a look at my positions. I do have 400 shares. I am down currently almost $18,000. And then I do have these leap calls. So when I first bought these lead calls, the stock was above 200. It seems pretty good to have a 350 strike price that expires in 2023. So I do have about 10 of these. I did buy a couple more, but I might sell these and then just buy a closer strike price to where the stock is trading now, because it might take longer than 2 years to go back above 300. And then I have some call options that expires in November. So these are 175 strike price. So I have 2 of these, and I have one that expires next month. These are October 15th. I only have one. And then I have 3 put credit spreads that expires September 24th. So the stock has to be above 170 for me to make max profit. If not, I will have max loss unless I go ahead and roll this over to the following month and lower the strike price. And now we have a cash secure put. So these are cash secure puts. These are 170 that expires next week, and then 165. So as long as Alibaba is above 170, I can receive the full profit. If not, I can have 2 choices. I can buy the stock at 170, or I can roll to the following week and wait for the option to expire worthless. So I do have a few options there, which I'm not too worried about because those are cash secure puts. I don't mind getting this signed because I want to own more Alibaba shares. Do you believe that Alibaba will try to break above the 170 resistance, hold, and go to 180 at least by the end of this year? Thanks so much for watching, guys. Let me know in the comments if you're holding onto Alibaba, and check out the Patreon Discord page. I'm trying to find like-minded people like myself who's trying to make money in the stock markets or trying to rebuild their portfolios. Hope to see you there.